For more than 20 years, millions of people around the world have been holding Iraqi Dinar banknotes, waiting for one life-changing moment. A moment when the currency suddenly becomes worth thousands of times more than it is today. Some people have been told that one Iraqi dinar could someday be worth $1, $3, or even more. They believe that if they simply hold onto their currency long enough, they could wake up one morning with a fortune sitting in their hands. This idea is known as the Iraqi Dinar (RV), short for revaluation. For years, online communities have predicted that this event is right around the corner. Every few months, a new date appears. A new rumor spreads. A new insider claims that something big is about to happen. But after more than 2 decades of predictions, one important question remains. Can a currency really jump in value overnight and create instant wealth for millions of people? To answer that, we need to understand how currencies actually work, who controls them, and what would have to happen for a country's money to dramatically increase in value. Because the truth about currency is much more complicated than internet rumors make it seem. Before we continue, remember that this video is for educational purposes only and is not financial advice. To understand why so many people believe in the Iraqi dinar revaluation story, we need to go back to the beginning. The year was 2003. After the US-led invasion of Iraq, Saddam Hussein's government collapsed, and Iraq entered a period of major political and economic change. The old currency system was replaced, and a new Iraqi dinar was introduced. For many people watching from outside Iraq, this looked like a potential opportunity. And then something else happened that influenced the way people viewed Iraq's future. They looked at Kuwait. In 1990, Iraq invaded Kuwait. During the occupation, Kuwait's currency system was disrupted. After the Gulf War ended, Kuwait restored its currency and continued rebuilding its economy. Many people saw this and made a comparison. If Kuwait recovered after a war, why can't Iraq do the same? This comparison became one of the biggest reasons behind dinar speculation. The idea was simple. Iraq has massive oil reserves. Its currency was once stronger decades ago, and if the country recovered, maybe the dinar could return to its previous value. But there was a major difference that often gets ignored. Kuwait and Iraq entered those situations from very different economic positions. Before the invasion, Kuwait had a highly developed economy, strong institutions, large financial reserves, and a stable international position. Iraq, on the other hand, was dealing with years of sanctions, wars, damaged infrastructure, political instability, and economic challenges. A currency does not regain value simply because a country once had a stronger currency in the past. A currency's value depends on the economy that supports it today. But despite these differences, the comparison continued spreading. As the internet grew, online forums appeared where people discussed the possibility of an Iraqi dinar revaluation. Then came websites, newsletters, podcasts, and YouTube channels dedicated to tracking supposed updates. Many of these communities followed anonymous sources, often called gurus, people claiming to have inside information about secret government decisions, hidden banking meetings, or upcoming announcements. Over time, an entire ecosystem developed around the idea. Every misprediction created another explanation. A date would pass without a revaluation happening, but instead of ending the theory, a new reason appeared. Maybe the government was delaying it. Maybe banks were waiting. Maybe a secret agreement had not been announced yet. And then another future date was predicted. This cycle continued for years. But after 2 decades of failed predictions, the bigger question is no longer, when will the revaluation happen? The better question is, why did so many people believe it would happen this way in the first place? To understand that, we have to look at how money actually gets its value. A currency is not valuable because someone simply decides it should be. Its value comes from confidence. Confidence in the country's economy. Confidence in its government. Confidence in its ability to produce goods, trade internationally, control inflation, and maintain financial stability. There are different types of currency systems around the world. Some currencies have a floating exchange rate. This means their value changes constantly based on global markets. The US dollar, euro, and Japanese yen are examples of currencies whose values move based on supply, demand, interest rates, trade, and investor confidence. Other currencies are managed or controlled by a central bank. In these systems, the government or central bank plays a major role in deciding how the currency is valued. The Iraqi dinar operates under a managed exchange rate system controlled by the Central Bank of Iraq. Think of it this way. A floating currency is like a boat moving on the ocean. The waves, wind, and weather constantly affect where it goes. A managed currency is more like a boat with someone controlling the direction. The person steering can make changes, but those changes still have to match the conditions around them. A central bank cannot simply announce that a currency is worth thousands of times more and expect the entire world to accept it. For a currency increase to be sustainable, the country behind that currency needs real economic strength. That usually requires things like a growing economy, strong exports, political stability, low inflation, investor confidence, reliable institution, international demand for the currency. These things take years to build. They do not appear overnight. This is where one of the biggest misunderstandings about the Iraqi dinar begins. Many people confuse two completely different concepts: revaluation and redenomination. A revaluation means a currency becomes genuinely more valuable compared to other currencies. A redenomination is when a country changes the way its currency is displayed. For example, a country might remove zeros from banknotes to simplify transactions. But removing zeros from a currency does not automatically make people richer. If a country removes 3 zeros from a banknote, the numbers become smaller, but the actual purchasing power may remain exactly the same. Changing the appearance of money is not the same as creating new wealth. And this difference is extremely important when discussing the Iraqi dinar, because many expectations surrounding the RV depend on the idea that changing the currency structure alone could create enormous wealth. But real economic value comes from production, trade, stability, and confidence, not from changing numbers printed on paper. Now, let's apply this understanding directly to Iraq. The biggest challenge with the idea of an overnight Iraqi dinar revaluation is the size of the change being predicted. Some claims suggest that the dinar could suddenly rise from its current value to several dollars per dinar. To understand why economists question this idea, we have to look at scale. A currency is not just a number on a website. It represents the value of an entire economy. If a country suddenly increases the value of every unit of its currency by thousands of %, the total value of all the currency already in circulation would also increase dramatically. That creates a major economic problem. For a currency to become significantly stronger, the country behind it needs enough economic power to support that value. That means higher productivity, stronger exports, greater international demand, and confidence from global markets. Iraq has important economic advantages, especially its large oil reserves. But oil wealth alone does not automatically make a currency one of the strongest in the world. Many countries have natural resources but still struggle with inflation, political challenges, or economic instability. A strong currency requires more than resources underground. It requires a strong economic system above ground. Another important factor is the role of the Central Bank of Iraq. The central bank is responsible for managing monetary policy and maintaining stability in the financial system. Major currency decisions are not made through online rumors, anonymous messages, or private groups. They are made through official institutions and communicated through legitimate channels. A sudden currency change affecting millions of people and international markets would be one of the biggest financial events in the world. It would not happen secretly. It would involve governments, banks, businesses, and financial institutions around the globe. Another common claim in dinar communities involves secret bank meetings or special exchange rates that supposedly exist behind the scenes. However, these claims have not been independently confirmed by recognized financial institutions. A major currency event cannot exist only through internet discussions. It would need real evidence from official sources. This is one of the biggest differences between speculation and reality. Speculation depends on predictions, rumors, and expectations. Reality depends on measurable economic changes. There is also the issue of Iraq's political and economic environment. Over the past 2 decades, Iraq has experienced significant challenges, including conflict, political instability, corruption concerns, and security issues. These factors influence how investors and international markets view a country. When investors feel uncertain about a country's future, demand for its currency is usually affected. This does not mean Iraq cannot improve. Countries can rebuild. Economies can grow. Currencies can strengthen over time. But sustainable currency growth normally follows visible economic progress. It does not appear as a sudden overnight transformation without major changes happening first. So if the economics do not support the idea, why does the belief continue to survive for so long? The answer is psychology, incentives, and human hope. The Iraqi dinar story is powerful because it offers something many people want: a simple solution to a difficult financial life. The idea that a small investment could suddenly solve years of financial pressure is emotionally attractive. For someone struggling with bills, retirement concerns, or debt, the possibility of a life-changing payout can feel impossible to ignore. And this is exactly why these types of financial beliefs can become so powerful. People are not only buying a currency, they are buying a possibility. They are buying hope. Online communities can strengthen this belief because people surrounded by others who share the same expectation often feel more confident. When everyone around you believes something will happen, doubt can become harder to express. A failed prediction does not always destroy a belief. Sometimes it creates a new explanation. The date was wrong. The information was incomplete. The announcement was delayed. Another opportunity is coming. This creates a cycle where the prediction continues even after years of disappointment. Psychologists have studied similar patterns in many areas of human behavior. When people become emotionally invested in an idea, accepting that the idea may be wrong can become extremely difficult, because admitting the prediction failed does not just mean changing a financial opinion. It can mean accepting that years of waiting, discussions, and expectations may have been based on incorrect information. That is a difficult thing for anyone to process. But understanding this psychology is important because it helps explain why these communities continue. It does not require assuming that every person involved has bad intentions. Many people genuinely believe the information they share. However, incentives also exist. Some sellers benefit financially when more people buy currency. Some content creators benefit from views, subscriptions, and audience attention. A prediction that creates excitement often gets more attention than a careful explanation saying. Real economic change takes time. Attention is valuable. And in the online world, dramatic promises often spread faster than realistic information. This is why it is important to separate hope from evidence. Hope can motivate people, but financial decisions should be based on facts that can be independently verified. And this is where financial regulators have repeatedly raised concerns. Organizations responsible for protecting investors have warned people about exaggerated claims surrounding Iraqi dinar investments. Their concerns usually focus on the same warning signs: promises of guaranteed profits, claims of secret information, pressure to buy quickly, unregistered sellers, predictions of massive returns with little risk. These warning signs are not unique to the Iraqi dinar. They appear in many types of financial scams and unrealistic investment opportunities. The pattern is usually the same. A person is told that a rare opportunity exists. They are told that most people do not understand it. They are told that a major event is coming soon, and they are encouraged to act before everyone else finds out. But legitimate financial opportunities usually do not depend on secrecy. They depend on transparency, regulation, and evidence. The question is not, could Iraq become stronger in the future? Of course it could. The question is, does the evidence support the idea of an overnight currency explosion that makes ordinary holders wealthy? And based on how currency systems work, the answer is very different from what many online predictions suggest.